So this is part 2 to the big changes that are coming to the condo industry starting Monday, August 3rd. So I ended the last video letting you know that now, starting Monday, August 3rd, these condo associations must have fully funded reserve funds. So there's a lot of reasons that an association would need fully funded reserve funds. Of course, in case something happens, like a natural disaster, hurricane, tornado, whatever. They also have to have the reserve funds, and this is common sense, to pay their insurance deductible when that natural disaster happens. The reserve fund is also for any maintenance that comes up that needs to be handled immediately in the neighborhood. Like say someone's deck needs repaired, or say there's a sewer issue. You need a reserve fund for all these things. So what's going to happen Monday when many, and I do believe many of these associations do not have the full reserves they need? What's going to happen? Well, first let me give you an example. So say a condo community has been charging $400 a month, for the HOA fees for the past 30 years. Obviously, in that 30 years, material prices have gone up. Everything has gone up in price. And that 30 years, they haven't been funding the reserves as they really needed to because, they don't want to make the owners mad and keep raising the HOA fees. So now, since they never funded the reserves properly, what are they going to do when August 3rd comes? Well, that's where a special assessment comes in. So what is a special assessment, you may ask? So it's a one-time bill sent to every single owner in the neighborhood to make up the difference. It could be $900 per owner, or it could be $25,000 per owner. I even heard of a condo association in our area who had to charge $30 per owner, and it was due immediately. Okay, so if the reserves are underfunded and they have to charge a special assessment, is that it? No, because now if the reserves are really underfunded, when it comes time to renew the neighborhood's insurance policy, the insurance company may drop the neighborhood. So when the insurance company decides to no longer cover the neighborhood, what does that mean? Well, it means basically the neighborhood becomes unwarrantable. And what does that mean? Once a neighborhood is unwarrantable, that means Freddie Mac and Fannie Mae no longer lend in that neighborhood at all. It basically means that only cash buyers and buyers with very specific portfolio loans can buy a condo in that neighborhood now. And you're probably thinking, why does this matter? Well, it really does matter, because if Freddie Mac and Fannie Mae are not going to lend in a neighborhood anymore, that means you only have cash buyers and people who can qualify for special portfolio loans, which are usually at a higher interest rate and usually require lots of money down. So this shrinks the buyer pool quite a bit. It shrinks the buyer pool because many first-time buyers won't be able to buy, regular families that might not have a lot to put down. And so this will attract cash-only buyers, which is usually many times investors, or again, those people who have a lot of cash reserves and can qualify for a portfolio loan. Well, guess what? Some neighborhoods don't allow investors. So this is definitely going to limit the buying pool much further. So here's just a breakdown of what's going to happen if HOA communities don't have their reserves fully funded. You'll see right here, and I'll go over these in the next video, but underfunded reserves leads to failed federal review, aka Freddie and Fannie are out of there. It leads to a limited buyer pool, then lower appraisals and lower resale value. In the next video, part 3, I'm going to talk about how this affects people who own condos right now.